viewers, welcome to my channel Markets Munch. Today our video is about looking insights of many questions like what made COVID-19 an global emergency? Why does the impact of it is at the peak stage on markets from last few days? And the very interesting question is how will we get through this as an active investor? I highly recommend to watch this video after watching the part 1 which is popping up in your top right hand corner of the screen, and then continue to watch this video. It's worthwhile watching this as a new investor or an active investor because this video contains highly recommended tips in the greater fluctuated situation as now. Let's get started. Let's talk about global and Indian markets for a while now. It all started with consumers. Consumers start to wake up to COVID-19 threat to the economy. 10 days ago, it's just a problem with China. The imports and exports of the China has been stopped because of COVID-19, which had impacted to only those countries that had been dependent on China's exports and imports. But now, since it has spread to different various countries which are considered to be strong nations like South Korea, Italy, Iran, Canada, US and Germany, the economies or the markets have been impacted a lot, and hence this can be seen as crystal clear on our market strategies that we are facing now. US Dow Jones has never failed 1200 points in one day. Explaining Dow Jones, it's an index that tracks 30 large publicly owned companies in US trading under New York Stock Exchange. Dow Jones is named after Charles Dow and Edward Jones, who created this index in 1896. So from this we can understand the severity of the crash now. You can clearly see the statistics of the graph on the screen shown. Moving further, talking about the Bombay Stock Exchange, that is BSE Sensex, suffered a biggest single day loss in absolute terms since August 24, 2015, which is 1625 points in Sensex. In representing numerical, Sensex has attained 38,297.29 and Nifty 50 has attained 11,201.75 points, losing about 1,448.37 and Nifty about 431.55 points respectively. In terms of percentage, Sensex has lost about 3.64%, while Nifty 50 has lost about 3.75%. This situation is foreseen by VIX indicator. VIX indicator can be explained or abbreviated as volatility index, which is an indicator of the market mood in the short term. It's also a measurement of the market risk and is estimated by the Nifty prices. It has launched by National Stock Exchange on April 2008. Economists can easily analyze the future of markets through VIX indicators. If the index option prices increases, that indicates the markets are volatile, and hence VIX indicator increases, which raises the risks and fears among the markets, and finally markets fall. And in contrary to that, if the index prices of the markets decreases, indicating the markets are non-volatile, and hence decreasing VIX indicators, finally increasing the balanced and hopeful market. All the global industries, what we call as multinational companies, work under the concept called supply chain management. All of its production and operations are through this concept. This COVID-19 has disrupted supply chain management a lot, making all the markets around the globe fall dramatically. To explain this in an example, Apple Incorporation suits it. Though it's owned by United States, the tremendous demands on its products around the globe made it to work under the operations of supply chain management. Most of its raw materials are obtained from countries like China and Korea, which made it to lock it down because of global emergency created by COVID-19. There has been a lot of selling pressure on metals, infrastructure, public sector, capital goods, automobile, banking, oil and gas, as well as IT stocks. I have already been discussing crude oil, automobile industry, pharmaceutical industry, electronics and white goods demand in part 1 of this video. The same situation has extended to several other sectors because of the wide transmission of disease all around the globe. This explains the serious impact on all the remaining factors and markets as a whole. One of the major responsible factors for this market crash are foreign portfolio investors. They contribute a major factor on the downfall of the markets because they sold off around 10,000 crore stocks. Now talking about very interesting question, what as an investor should we do now? To answer this $1 million question, I want to explain a scenario about two types of investors in the stock markets. They are investor A and investor B. Investor A, they are are safe players. Whatever the circumstances is, they don't want to face the risk and they want to be on the safer side as always. In this type of situation, they play a very safe game by selling all of the stocks all of a sudden and converting into the safer commodities like gold and tangible or intangible assets like properties, etc. Important point is majority are safe players, resulting in current situation. By talking about investor B, those are foreseers or risk betters. They are very less in majority, that's why they are called rich. According to economists, those are very smart and efficient investors in the markets. They does the risk management very efficiently and effectively and invest major amount of the money to earn more. Considering the proverb, no risk, no reward. But to be an investor B, he should have sound knowledge to know what are the quality and fundamental stocks in stock markets. As an investor, I strongly suggest and try to be investor B because once a wise man said, the way to make money is to buy when blood is running in the streets, which guides us to buy all the fundamental and quality stocks rather than running behind penny stocks. Let me know what type of investor are you in the comment section down below. If you like this video, please like, share and subscribe to the channel. My name is Manognya Isetti. I am an MBA marketing aspirant. See you in the next video. Signing off for today. Peace out.